Good morning, good afternoon, and good evening, and welcome to the Monday, the 21st of November Bull versus Bear webinar. Steve Miley here on the call for trade day. Welcome, everyone. We're going to go through usual run through in here today with a few little different changes. Just one thing here I need to talk about is the trading schedule going into this week. But we'll also talk about, as we do on a Monday, the shape of the week, what we've got coming up throughout the week, as opposed to just focusing on what we've got coming up today on the macroeconomic data and the fundamental side. We'll also take a look, as usual, at some articles, very few of them, very little gone on over the weekend, really. Let's take a look at some articles from the major news wires. And we'll also take a look at the charts. So kicking off with the holiday schedule, right? I will share this page here in the chat. I will make sure, if it hasn't been done already, James and I were talking about it over the weekend. We will share this on the activity feed and various other places on the site. Not just this page. Now I can click, if I click into the actual Thanksgiving calendar in here, into this compact one, it opens up, and then no, it just downloads it. Yeah, it doesn't pop it out into a new. No, it doesn't. So the issue there is I can't. Yeah, I can show it on a different screen, but then it all gets a little bit complicated. Never. We will revisit this, and I'll make sure I can share this with you. But suffice to say, obviously, it's Thanksgiving in the US on Thursday, so. Closing and opening hours are different. Certainly on the Thursday. Also on the Friday, partial opening on the Friday. The market is kind of partially opened on the Thursday, and also I think slightly, depending on the market, most markets are closing the same time on Wednesday, but then you've got the after hours are different. Now, so all of that, guys, means obviously you have to be aware of that for the various, closing rules we have at trade day. So please do. I've put the link in here. We'll share it on the site. We're going to make sure everyone knows about this as much as possible. We'll email out. But, at the end of the day, it's your responsibility to know these things. Okay, guys, right? You have to do the due diligence. You need to know when the market's closed. You need to know when to be out the trades. We can lead you to it. We can show you it, but it's your responsibility. And going forward, when you trade for yourself, whether it's with trade day or not, you should be aware of when the markets are open and when they're closed. All right. So please do, do your due diligence. Take a look. Put the link in here in the chat. We will post it on the site. I will talk about this probably every day, right the way up to it, but please be aware. Okay, let's do a little bit of a look back and a look forward to what's been going on. So this is actually news. The first thing here was actually from last weekend, but obviously, and that impacted markets a little bit last week. Biden and President Xi Jinping of China met, not the weekend just gone, the weekend before that. And that gave a little bit of a positive boost. Target shares dragged us lower last week, but we did get some positives from Walmart, Foot Locker, and Ross stores. Retail sales were better than expected last week from the US. On the UK side, the autumn statement was a worry for markets, but we got through that without much of an incident. But new higher taxes and spending cuts, and UK inflation printed above expectations at a 41-year high, came in at 11.1%. So that's what we had. It wasn't a particularly busy week. Now, not expecting too many fireworks this week as well, given that we have the Thanksgiving holiday Thursday, partial holiday Friday, and then I'll talk a little bit more about what we've got coming up. But it's a fairly quiet week actually. Equity markets consolidated. Remember the week before we had surging gains. We had that CPI day where we had the best day since 2020. 5% up on the S&P, 7% up on the NASDAQ. And the market last week just defended the gains from the prior week. US yields pushed slightly lower, but then they did bounce back to higher yields. And the 2-10 yield curve inverted even more. And it's most inverted level now for over 40 years. So that's often a sign of inflation, of recession over the next 6 to 18 months. Oil prices continue to go lower gain this morning on concerns of global growth slowdown. And copper also selling off. Copper had a big up week with stocks this prior week, and then a big down week last week as well. It gave up much of the gains from the prior week. So going into this week, it's relatively quiet week. We've already had actually the PBOC in play today. Nothing really of note to add there. The People's Bank of China. We get the RBNZ, which again, it's not a major central bank, right? So they are in play though on Wednesday. And then the big deal for the week are the Fed minutes that we get on Wednesday. And then that kind of ends the week really for us, because then you've got the Thanksgiving holiday Thursday and the partial holiday Friday. So markets kind of close. Obviously, the cash markets are all closed. We have partial days on the futures markets on Thursday, cash market half day on Friday, and partial closes and early closing on Friday in the futures markets. So it's really a very, very light data week. And see, the only other thing, real note I would point out, is we get the global flash PMI data. So we don't get this from the ISM. So the US data, the bigger data for the US is the ISM, the Institute of Supply Management, on the PMI side. The global data that we get for all the other nations, we get it for the US as well, and for the other economies, is the S&P Global. It used to be market data from market, M-A-R-K-I-T, not market, and S&P Global acquired market in the last year or so. And so it's the S&P Global Flash PMI, and they give us, these are the heads up for this month's PMI. So they come usually in the third week of the month, which it is now. And so that is going to be the November data. Even though November's not finished yet, they get like about 80% of their replies in for that Purchasing Managers Index survey, and they publish them as Flash PMI. And they're very good numbers in that they are, the final numbers are usually very close to these Flash PMI numbers. So we're certainly going to be watching for those. That come out on Wednesday. The rest of the week is fairly quiet, as I say. Get German IFO's survey, German GDP. Probably not going to impact the markets that you guys are looking at. They come on Thursday, Friday. Nothing really now for the rest of the day today. Canadian retail sales. And if we drop into the economics calendar, now there is an issue with the economics calendar on the site, in the trading room at Trade Day. We are investigating that, and we will get that sorted out. But you can see in here, nothing really of note in here coming for the balance of today. And if we go to this week in here, you can see I've just got the things that the main European and US numbers in here, and it's a very light week in here. See, there's nothing really of note there coming through today, going through tomorrow. It's all very, very light. If we look at the US side in here, very, very little of note. We don't even get any Fed speakers in here until tomorrow, so nothing really coming through today. And obviously Thursday, Friday with the US holiday, even quieter. So yeah, expecting a relatively quiet week in here. Let's go to 5 things to start your day. So this is the big news really over the weekend. Which we had, China was starting to loosen its COVID curbs, and it was using a test case, and then they've gone into a lockdown for this test case. So a city near Beijing was being used as a test case, where they all virus restrictions have been suspended, but they've gone back into lockdown in here. So so they're suspended schools. Lockdown universities asked residents to stay at home for 5 days, and this is a test case for opening up. So that's not good, clearly. Disney shares that is on the that's could help markets a little bit in here this morning, up 10% in pre-market. It brought back Bob Iger, came back to replace his previous successor. World Cup, remember, kicks off today. We have England playing in literally 20 minutes, kicking off. USA playing later on today. Good luck to those teams. Well, but it's a bit difficult for us with the USA. We're in the same group as the USA, so that's going to be interesting. USA playing Wales, UK playing Iran in literally 20 minutes. So I'll certainly be off the call before that. And US equity futures have dipped lower in this morning on the back really of that COVID news, COVID zero news out of China. So if we look in here, so futures decline as China COVID cases rise. Disney does jump though, covering off that from Reuters as well. If we take a look in here, dollar stocks drop on China COVID worries, dollar rises, so dollar up with risk off, and Disney shares up, jumping higher. And what else do we have? This is more on China, really. China here, China stocks slides. The Chinese stocks were dragged lower on that, and oil also down on China as well in here this morning. If we look at the European bourses in here this morning, European exchanges lower. The FTSE is only down a tenth, the CAC down 0.3 in here, And if we look at the German index, the DAX, down by 0.6 in here. So the FTSE is pretty much unchanged now, as you see. 0.6 on the DAX and 0.25% on the CAC, the French index. If we look at what that means for European stocks in here this morning, where are we? So European stocks in here this morning. European US futures in here, excuse me, this morning. We're down 0.2 on the Dow, 0.5% on the S&P, and 0.8, nearly 1% down on the Nasdaq in here going into today. Quick nod to the Fed tool, but not much to really update in here. Has dipped off that 80% level for the 50 basis point cut, but pretty much nailed on for the 50 basis point cut over the 75 basis point cut at the next meeting. Let's look at the charts. Well, kind of indecisive in here. This is the S&P first of all. We did get that down day, but then a rejection of the down day. So you remember we had the shooting star pattern. That was back on the, what was it, Monday? That was Tuesday, right? Shooting star pattern on the Tuesday, negative. And then Thursday, hammer pattern, positive. Friday, we end up the week, doji pattern, inside pattern, indecisive. Slight dip today. Not really telling us too much in here. It's a little bit confused in there. Going into today, and it's a similar tale if you look at the Nasdaq in here. So you had the shooting star, then the hammer, but we are down through Friday's low. So the Nasdaq's certainly looking more vulnerable. So you would argue that all the risk has shifted to the downside in here now. It does look like a potential topping pattern still continuing to build in here. Although we got that rebound back last Thursday, Friday was indecisive. We just managed to get above the resistance I flagged here and then failed miserably. And then the market kind of neutral, and then this morning down lower. So, I think there is a risk we go down and take a look at last week's low on the Nasdaq going today. You'd have to say it's setting up a little bit more negative. So risk down to the low, and if it takes out the low, then obviously notably lower. But there's nothing to really drive it significantly either way. And given it's a holiday week, given we've got the Fed on Wednesday, the Fed minutes on Wednesday, it could be more of a consolidation day. So I'm not aggressively wanting to do anything in here. It could trail down towards the low, just go below the low, but I wouldn't be an aggressive seller through the low because I think it could easily mean revert. It could easily be a chop day, a mean revert day. We could go to the low and through, but then it might be a buy. It's not necessarily going to plunge lower in here. It's a bit of a no news day. So, potentially you're looking to buy it down here and set it up here. So maybe selling it, above 11,800 and buying it, down below like 11,550, is maybe the view in here going into the day. At the moment, it's kind of a little bit no man's land, slightly negative if you want a fast day trade view, but nothing strong. And it's the same with the S&P. Look, we've been sideways city. And if we go into the 15-minute, less negative than the Nasdaq, you'd have to say, still holding the supports that are sitting around 39.42. But, it'd have to be at least back above here, 39.83. You'd say you'd want to sell it up towards 39.90 and then buy it towards 39.22. We're slap bang in the middle. So no strong view going into today, to be quite frank. Let's take a look at the more of a stronger view here on oil. Oil looking very vulnerable. Big down day on Friday. It went right into that head of the head and shoulders. Remember, on Thursday, we were talking about going into the shoulder. Now we're way into the head. On Friday, we did rebound from there, but lower again this morning. And on the 15-minute chart, you'd have to say that oil continues to look vulnerable to further down. So I think I'm on the wrong contract now. We've rolled off the debt contract. I'll update this from tomorrow. I'm just going to double check in here. You won't be able to see me in here now, but I think we're on the January. I might update this right now, actually, on the January contract, I think. Let me have a look. On oil, just checking offline here. Oil. We're on the January contract now. Okay, so I'm going to actually update that now, add this in, so we're not in the same position for tomorrow. So we're at CLF. So CLF 3, of course it's 3 now, right? 23 next year. There we go. Okay, I'll just add that one in again. So we've got it both on the CLF 3. And then we've got intraday and the daily. So we'll change this to the daily chart. So we've got both of those there. So we'll be looking at you should be looking at the January contract probably in here now with this, guys. CLF. If you're trading oil, I'm going to get rid of the CLZ. Okay. So still looking negative though on those. There's the January contract. Yes, a bit sideways in here, but dead cat bounce. And look, we've had these big sell-offs, slight rebounds, sell-off rebounds, and so we're looking for the next down leg there. Let's take a look at gold. Just double checking on gold that we're still on the debt contract. believe we are on gold. Yeah, gold's still on deck. Grinding lower, and even with stocks kind of holding in, grinding lower. Now, it wasn't as negative on gold, but gold's starting to turn certainly more negative after Friday's breakdown. Look, we spoke about this, right? The breakdown through the neckline in here, broke the neckline, rebounded, fouled, and now we're lower lows and lower highs. So real risk for a down day. I mean, this would probably be the most easiest trade in here, I think, for today. The setup for me is the easiest setup in here. Being short gold is the most obvious. Maybe that doesn't work still, and you've got an obvious stop in here. Short here, stop above the recent peak. Adding down through the low in here, and there's not a lot of support. If we look here, because we had this blast higher, there's not a lot of support in here now for oil. So it could, for gold. So $10 down would not be a surprise, but it needs a driver on that, and we're not getting the driver on that at the moment. So there you go. All right, guys, I'm going to wrap it up there. I'm going to go and prep myself to watch England play against Iran. Good luck if you're in the US and you're following US versus Wales later on today. I'll be back with you tomorrow. Don't forget to check out, the link is in the chat. Check out the closing days. Make your plan now. Know when the closes are. We'll put it onto the site activity, but please do check that out for Thanksgiving on Thursday and also the shortened trading hours on Friday. I'll be back with you with another Bull versus Bear webinar tomorrow. Until then, have a great trading day.